Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, December 4th, 2016. Hope you guys are having a fantastic weekend. Really not a whole lot to go over. The S&P closed down 87 cents on Friday. I meant up 87 cents. So really not a whole lot to explain because nothing really went on. So let's get started. This is the 15-minute chart of the S&P. And this is green. This was our up channel. So once we broke it, this was telling us that momentum on the upside was going to start getting weaker. So it came back up. It actually made a new high, but what it was doing was like kind of back testing this channel. And from here, this is where we started our downtrend channel, and this is in the red. So we broke out of it. So now what may be happening is we're in the neutral zone. That's what the black is right here. So if the what would actually make sense is, right now we should chop around because it's bounced out of this this channel. And what may happen is we could head up to this 2198 level, and it would actually make sense because this would be considered your bear flag. Now, the target on it, you have 2214. The low is 2187, so 13, about 27 points. So it'd be 27 points below this 2188, and if you remember, that's going to lead us right into some support areas and targets that I'm anticipating. Now, if we break out of this channel and in the bulls take it above this 2201, most likely something else is going on, and we may be coming back up to test the highs and where we make kind of a rounded top, because that's another thing. But overall, the expectations were for the uptrend to start losing steam, and that's what's happened. And like I've been saying, I'm not overly bearish on this market right now. It's just there's reasons that we should expect some kind of rest and test of support. So if we take a look at the 60-minute chart, we have the bearish divergences there. Again, this looks like just a bear flag that's going to break to the downside. And again, you can see that they may be making some kind of rounded top. And if that does happen, then we're probably looking at a move to come anywhere from the 2164, and it could go all the way down to the 2133 level and make sense. So really what the bears are going to have to do is get it through. Well, first of all, they have to make lower lows. The 2183 is the 23% retracement. If you remember, that's what I was saying. The bare minimum of the retracement should be. But if they start taking it through this 2183, 2180 level, that's when we should get a reaction trade down to this 2164 or down to the moving average at the 2160. And this will be actually more constructive for the bulls than just trying to keep going up, because you just run out of steam and then everybody becomes all anxious about being caught along when they pull the rug out, and people start taking profits. But when you have this two steps forward, one step back, then you're able to keep things going. Unfortunately, the algorithms haven't really given anybody a chance on that, but every once in a while it does happen, and it looks like we could be starting that right now. So what the bears have to defend is the 2201. So we have this moving average here, as well as price resistance. So if we start breaking through the 2201, most likely they're coming back up and going to either test or break these highs. If the bears can push it through this support, then expectations, if you're just looking to buy, would be anywhere from the 2164 down to the 2148, and then just leave a little loose change for if it does get down to the 2133. But this would be a buying opportunity for the Santa rally that most likely will take us above these levels. So we have the bearish divergences. They burned off some of the the overbought levels here, and again, we are kind of just going sideways. So that's not a it's not that bearish, and I'm not going to try to paint a bearish story for you if it doesn't look that way. It would make more sense to come lower, get these deeply into the oversold levels, and hopefully start some bullish divergences before heading higher. But unfortunately, on the way up, we haven't really had that many bullish divergences in place, and they end up just rocketing higher. So they're not really giving anybody a heads up when it's gonna, when they're gonna move it higher. But they've given us heads up on when they're going to be giving it lower because we have the bearish divergences that are in play. So so again, right now that the bears have to defend this 2201, the bulls want to defend this 2184 down to the 2180. And that's really going to be our battle zone. And whoever wins that is going to win this next move that will either take us down to the, like I said, the 2164, 2133, or up to it could be 2225, 2250. We'll have to wait and see. But like I said, I think that's too big of a move for only having a very shallow pullback. But it's kind of crazy the way this market works. So now another thing that's this is a bearish view is we have this bearish rising wedge, we have the bearish divergences, and this came up and just back tested the bottom of the broken wedge. So that happens often, and as you can see, we made the new high on it, but it ends up being a bearish thing because it traps a lot of people. Now, what I was thinking could happen is, if you notice, this is obviously this is moving up right here. So we could spend the next let's say week or so consolidating here, and then come back up and test this. The lower end of the bearish wedge, make new highs, but it would still be bearish, and then from there we would get some bearish divergences, and that would probably open up the door for a drop that not a lot of people are going to be anticipating, and from there the mix-up will come with people calling it a new bear market, and from that, most likely it'll be the new buying opportunity. So right now, like I said, I'm expecting some weakness. The time period is it's getting into the bull side. So hopefully they're gonna give this a little backing and filling, and from there we could use it as a buying opportunity for the next move to the upside. So with that, enjoy the rest of your weekend. I actually have an early doctor's appointment tomorrow, so if I don't get the morning notes out, that's pretty much why. I'm not sure what time I'm going to be back from it, but I have to be there pretty early. So if there's no morning notes, that's the reason why. And with that, enjoy the rest of your weekend, and I'll talk to you guys tomorrow.